Welcome to Lowenstein Sandler's VentureCrush. Welcome back for so many of you. I'm Meredith Bouchaw. I'm a senior partner in our Emerging Companies and Venture Capital Group, and I specialize in M&A, which is buying and selling, usually venture-backed companies. We're really excited today. We have Thomas Crane and Winnie Lau with us, but before we get into that, we have Kev Mo here, which is so exciting. We're so glad you're here. And he's going to talk for a little bit to my partner and friend Ed Zimmerman, and maybe we'll get him to perform a little bit. Kev Mo is a 5-time Grammy-winning blues artist. He's won 17 Blues Foundation Awards, including in the most recent BMA Acoustic Blues Artist of the Year. It's the 9th time he's won that award. But before that, just some housekeeping and a couple quick announcements. It's a great idea, if you're with us in person, to join the Zoom so you can participate in the chat. If you're going to do that, to avoid audio feedback, please don't join the audio. Just join without audio. There's a scan code on the screens that you can use to join. Panelist bios are in the Zoom chat. You can drop questions for our panelists there. We'll try to get to them. Chat with other attendees, connect with them, include your LinkedIn, and introduce yourself, please. And we'll share information about upcoming events, but a few to highlight. I'm really excited about our new event series that our partners, Eric Wiener and Laura Cicerelli, are running called the Founders Hour. We're doing it in person in New York, but it's also a podcast. And the next one is coming up at the end of April here. And the topic on that is venture debt and financing alternatives. We have a lot coming up during New York Tech Week. We'll share information. I'm particularly excited about our annual Women in VC event that week. And the next VentureCrush event will be June 24th, next time we get together like this. And then a quick update about Delaware that you probably didn't expect to hear, but at Lowenstein, we're really excited that we've been joined by Christopher Ward and Shanti Katona and their former and now present colleagues, Alyssa Hyder, Catherine Devani, and Michael DiPietro. So they joined our bankruptcy and restructuring practice, and they are based in Wilmington, Delaware. And we're going to get to open an office there because they are really well known in Delaware and nationally for their restructuring practice. So it really adds a lot to our firm. We're excited about it. And with that, I'm going to hand this over to you, Ed. You're going to get to sit and listen.
Thank you so much, Meredith. I'm going to say a few more words about Kev Mo before we start, because I know Meredith mentioned the 5 Grammy Awards and the 17 Blues Foundation Awards. 8 of Kevin's albums have been #1 in blues. Another 5 have been top 3 on the charts. And in 2006, he entranced the crowd at the inauguration of the fictional president in West Wing. He was invited to sing the same song at the actual White House, where he performed for and was introduced by President Obama. Kevin also appeared on Sesame Street, where he duetted with the Muppets, and collaborated with Martin Scorsese, who's almost as big as the Muppets, on his blues documentary. But also Kevin was first French horn in the Compton High School band. And that's kind of a big deal too, French horn. How did you, we'll talk a little bit about how you ended up playing French horn in high school, but it is such a great honor to have you here. And thank you so much for agreeing to join us today.
Thank you. Glad to be here.
So maybe we should start, Kevin, with you've won Acoustic Blues Artist of the Year 9 times. Each of your Grammys is for an entire album. Like, these aren't, little things. These are big deals. You've won them in several categories. And yet, you're coming out with an album now that is your first ever fully acoustic album. What took so long?
Okay.
Oh, and welcome.
Thank you. First of all, thank you all for coming in to listen to whatever I have to say. I have no idea why you want to hear anything I have to say, but I'm glad you're here, and let's get at this. Acoustic blues, it's hard to do an acoustic. It's hard to do an album and play just guitar and just sing, and then on the whole album. Just one guitar, one vocal. But I cheated. I have 2 guests on the record. One one is the Soweto Gospel Choir. The other one's Take Six. So just on 2 songs I cheated. And making an acoustic record is very difficult because the guitar has to say everything and the vocal has to say everything. And then the spaces, you leave the spaces for the listener to put their own information in or to feel in between and to get at it. So it's really difficult to find that balance and that kind of chi, the way the Jewish things flow. Have you ever heard Son House do like Death Letter Blues or something like that? It was a real acoustic thing with just vocal and guitar. It's a thing. It's a thing.
And I'm so used to seeing you live and go through like half a dozen different guitars, whether it's steel or electric or acoustic, or do you feel constrained to do everything on, I mean, today we spent a little bit of time talking about this in advance of today, but you only brought one. Do you feel constrained, or is it liberating to not be switching back and forth between guitars for you?
Well, I kind of got myself into a pickle when I started using a lot of different tunings and different instruments for textures and to get different effects. So I wish I had done it all on one guitar, that I could just bring one guitar. Now I have to do at least 4, sometimes 9 or 10. But I'm just glad to be in the music business. It's a nice thing to be in, so I'm not going to complain about how many guitars I have. But I just bought one today.
And that particular guitar is one of the models that Gibson has built for and named for you.
Yes.
Can you talk a little bit about that process and how I know you care very deeply about sound?
Having one good thing, you guys all know Ed, right? He's very good about asking questions that I have no idea what the answer is. Stump, it's called Stump Kevin Moe. Please repeat the question.
All right, first let me remind the witness you're under oath. The question was, can you talk a little bit about the fact that you've got this thing where Gibson puts out different models of acoustic guitar in your name?
Yes, I can break that down to like, it's not that I'm anything special or anything, but Gibson sells guitars. And if you have a name, some kind of popular, recognizable name, people are listening to you, young people are listening to you, and they like what you do, they're gonna wanna know what kind of guitar you play. So, of course comes up, well, Kevin, we want you to play our guitar. And it's marketing. So now all the things I did to get there, and that's the more interesting thing. But the guitar itself is like the Les Paul. Les Paul's famous, they made the Les Paul guitar. People like Eric Johnson, a lot of people have modeled guitars. Sheryl Crow, the name goes on and on. It's a signature guitar. It's an honor that a guitar company bestows on you as a thing to you, but also as to say, like, we're going to give you guitars because you're going to, when they see you playing live guitar, somebody might buy one.
And when you said all the things that it took to get here, you, very early in your career, you co-wrote a song that was on Red Octopus, an album that went to #1 on the charts. And then, like, there was a bunch of stuff, and then kind of crickets for a little while,
Yeah.
right?
Well, the album on the Jefferson Starship, the song on the Jefferson Starship album was a co-write, it was an instrumental, a jam with Papa Johnny Creech and our band that we had. And they gave us all writing credit. It was on a multi-platinum album. And we got checks. Yeah, and it was good. So it was been at the right place at the right time. Kind of like. Later on, I had to actually build some skill to get to get there, but that was a stroke of luck.
That was luck, and later it was skill. So let's go back even earlier, though, because you had this this transformation in this moment in high school where a teacher kind of pushed you to go see a performance at your high school.
Yeah.
You want to talk a little bit about that?
Okay. Okay, it's me in 1969. I'm in the 12th grade. I'm in Mr. McGee's mechanical drafting class, 2-hour vocational class, because I wasn't on the list of people that were going to go to college. So we were going to get this fool a vocation so we can go out and make some money. So I studied vocational drafting, which when I went to LA Trade Tech College for 2 years, I took architectural drafting. So I was going to be a draftsman or an architect. That's what I was going to be, because I didn't think I could make it in music. But back to your question, how did Mr. McGee, the drafting teacher, probably knew I wasn't going to be a draftsman. He knew I played guitar. He knew I was interested in music. And Mr. McGee had kind of like a sixth sense about students, who they were. So he said, "Oh, Mr. Moore, Mr. Moore, come here." He had a kind of a high voice. He's kind of ex-military dude. He said, "There's a concert today at the auditorium with an artist named Taj Mahal." I'd never heard of Taj Mahal. And he said, "There's 2 concerts," because it was a 2-hour class. He said, because I had 2 hours on both of the classes, he said, "I want you to go to both performances." So I saw Taj Mahal for the first time twice in one day. And it just like freaked me out in a way that was like, I was like, what is that? You know, it was like something I'd never heard before. It wasn't like my mother's blues and the things that I'd heard. It was just like a whole different thing. It was the 60s, and Taj Mahal with that big feather in his hat, playing I Paint My Mailbox Blue, and I was like, wait a minute, that's cool. So it put an imprint on me. I didn't go pursue a line of figuring out who Taj Mahal was, because I didn't buy records, and I never was that ambitious about doing things. One thing I think the luck for me, the part of me is I always follow what I call the yellow brick road. I follow the yellow brick road. I go where things push me to. So I go see Taj Mahal, and fast forward 2 years later, meanwhile, this has made a profound effect on me. I just don't know it. Meanwhile, 2 years later, a friend of mine who was in the business of the late night auto parts business, y'all know what that is?
Yeah, I think we can figure that out. In Los Angeles, yeah, we got it.
He was in the late night auto parts business, and he would always have 8 tracks. Some of you might, you know what 8 tracks are. 8 track, they put them in the Ask Your Mama. 8 tracks. So he had which was a 4 track, which is the predecessor to the 8 track. 8 track was fancy. So he get a 4 track, and he said, "I got this one here." I said, "I went and bought this, and I got hit all of the stuff. I just don't like it." And it was Taj Mahal's Natural Blues. I put that thing in my car and just wore it out, just did everything about it. And for years, like that song was that album was just something that lurked in my head all the time. And I wasn't even playing blues then. I didn't start playing blues in my early 30s. And it was I was at that time about 20, 22 or something, but I didn't play blues. I was kind of lost, but not really lost, because I always did exactly what I wanted to do. But question again.
So-
Taj Mahal.
Yeah.
Yeah, Taj Mahal. Then later I met Taj Mahal, and Taj Mahal was actually instrumental in helping me get my first record deal, because I was introduced to him. Someone knew who I was, because meanwhile I had started playing. This is such a long story. How much time y'all got? Starting in the middle of something, it's like a whole string of events that just keep happening. But what I'm trying to make point of is that this journey that I call my life is a journey of happenstance situations that kept happening over and over and taking me right exactly to where I needed to go. And it continues to happen up to this day now, even like as much as yesterday and last week. These strange kind of things, which is the Taj Mahal thing. So I feel like I've been divinely led to where I am now by people like Taj Mahal and by my ancestry and the people that raised me, my mother and father, and where they came from, Hooks, Texas, and Hefner, Louisiana, down there. And it's this something that's following me around, like my ancestors are following me around, and just going like, go over there, get there. Oh, he was like, go get him, he's over there. And now I'm here in this spot where all my dreams in my life came true and more. And that day I saw Taj Mahal was like a reminder, an inkling into like who I'm supposed to be and what I'm supposed to do. But I didn't take note, I just felt it. I just felt this was something really important. I know I'm skipping around. Is this making any sense to you guys?
Yeah.
Yeah. Basically, if you read a Deepak Chopra book, it's metaphysics. It's just things happening as they should. So I had the great privilege of not getting in the way of anything. No ambition, just wanted to play guitar, just wanted to be in a band, just wanted to write songs. I didn't want to sing. I didn't want to do anything but just hang out, play guitar, and be in a band. You know? But, you know, there was more to it. But I did like writing songs. And I fell into all kinds of situations. And even though I didn't go to college, I did 2 years of trade school, trade tech. And I worked at an architectural firm called Daniel Mann Johnson in Mendenhall in LA as an intern. And that was it. After that, I just gone, you know. But I just, I don't know where I'm going with this, but it's a magical journey of people coming and getting me.
Let's talk about you coming and getting Taj, because before the pandemic, you and Taj recorded the first Taj Mo album,
Yeah.
which quite understandably won a Grammy.
Yeah.
I had the privilege at your invitation, or maybe my pestering, of coming and catching one of the sessions in the recording studio and watching the two of you at the end of the night just joyfully dancing as you listen back to a track that you put on that album. What is it like to know that the guy that you idolized, the guy who triggered this momentous change in your high school self, is now someone with whom you've recorded multiple albums and had this kind of success?
It's an honor. It's like really unbelievable. I remember the night he asked me, did I want to do a record with him? I was in Atlanta at a bar, and we were sitting there talking. He says, I was sitting there with Nuffy and Dr. B. Serious, and we were like talking. He said, hey, I think me and you should do something together. So I go, I thought about it for a minute. I go, okay. Didn't take much. But, and we made a date because that was January, and we didn't make the date till October. We set a date to start. He came over my house. I had one song ready that I had written with the guy that introduced me to Taj, who was Chick Street Man. So I wanted Chick Street Man to be involved in the record. So he came over and said, we got to write a song. So I don't know what we're going to do with this. I want you to be on the record. We have got a song. So we wrote the song called All Around the World. And that was the first one. Taj came over. I didn't know how he was going to be in the studio. I didn't know he was going to be a jerk in the studio and start pushing me around. I didn't know he was going to hate what I did. I had no idea. So I just walked in there with ultimate humility and just said, okay, this is what I got. And after the first couple of songs we did, wrote 2 more. He left the house and was like, all right, I think you got this. He said, he trusted me was the biggest thing. And he trusted everything I did. And he teases me, he goes like, you ain't come with those tweezers because I pick at things. Pick at everything. I go through it. I'm just very meticulous about how I do things. And so it's just, and then I did a second album with him. You know, it's just amazing. I couldn't believe it. We did the tour, the first Taj Mahal tour. I'm on stage, I'm looking over there going, holy shit. What I'm thinking about, it's like, oh. And sometimes when we do Paint My Mailbox, you know, I'd be watching them so much, you know, that when it came down the second, and I was going to sing the second verse, he'd go, oh, yeah. 'Cause I was wrapped up in what he was doing. He's so brilliant. He's such a iconic artist. Great man. He's educated. His college degree is in agriculture, and raising cows and farming and stuff. He speaks several languages. His mind is sharp as a tack. At 86 years old, it's just amazing, you know. And so, I mean, he could be a college professor easily, and you don't even know it. I mean, his knowledge of everything, music, politics, history, languages, cultures, is just amazing. And he's a blues guy who's supposed to be the, you know, for the blues. That's ignorant. Wow, just to be in the presence of someone like that is just mind-blowing to me.
Well, I will just say that having had the privilege, thanks to you, to have spent a bunch of time with him and several dinners with him, my wife Betsy believes that he is probably the smartest person she has ever met, and he is dazzling, just dazzling. The intellect, the creativity, the knowledge, the history. Speaking of history, could we talk about your album Oklahoma?
Mm-hmm.
You're not from Oklahoma. You can't write yourself back into the history of Oklahoma. And you did a whole album about it. And there was an interview that I listened to from a couple of years ago where the interviewer said, you know, I don't think of you as political. And you were like, no, I'm political. And then you shared some knowledge, because I think of you as political in ways that people often miss. And they might, if they listen like the fifth time, they will realize, oh, wow, that was really political. Do you want to talk a little bit about that and about Oklahoma? Yeah.
Yeah, that was a co-write between, the reason it's called Oklahoma, because New Year's Day I had a party at my house, and everybody came over, and the next day I wrote a song with this lady named Dara Tucker, who's from Oklahoma. I didn't know what to write about. I said, where are you from? She goes, Oklahoma. I said, okay, let's write about that. Because I know people like from Oklahoma, like Vince Gill, Garth Brooks, Kristen Chenoweth, the Gap Band, and there's all these other people that I know who are from Oklahoma. And Oklahoma has this kind of like past, and they have tornadoes that blow through there and just chew the whole place up. So I thought, well, that's an interesting subject. So, and also there was this thing called the Tulsa Massacre in 1920. So I wanted to say something about that, but I didn't want to say anything. And I knew that that the neighborhood that the Gap Band came from was the Greenwood, Archer, and Pine. That's what Gap Band stands for, GAP, Greenwood, Archer, and Pine. So in the bridge, first I talked about the song, the chorus, the first goes, I can feel the spirit lifting me up, taking me higher. I can never get enough. I can never get enough of Oklahoma. And that speaks on like all the things that, the diversity, the culture, and everything like that. And then I spoke about the Indians, cowboys, the Choctaws, and Jesus on the main line, devil stay away, rain or shine, Oklahoma's gonna be okay because rain or shine over there. I had the spiritual privilege of going to Oklahoma after a big tornado and watched what a tornado can do. And I said, well, I'm from LA, we're from earthquake. This tornado, it really like breaks everything up into little sticks. It's like crazy. So then I said, I wanted to address the Tulsa Massacre. So I said, over on Greenwood, Archer, and Pine lives an elevated state of mind. So keep on reaching for the sky. And I had to steal Michelle Obama's line. Because when they go low, we go high in Oklahoma. And that's all about the Tulsa Massacre. Just a bit.
Yeah, there was a comment you made about how a dollar spent in that neighborhood would circulate 30 times among the black-owned businesses in that neighborhood, and
Because
that
they
had been a
couldn't
really
shop
important.
in the town, they couldn't go in. So they made their own neighborhoods, and this wasn't just Oklahoma, this was all over the country.
Yeah,
A lot of people know that, like, segregation, integration, the price that the African-American community paid for integration is broke our communities up. Because everyone who would go away, went away. And then we had an opportunity to really blend our communities in a great way, but we didn't. We separated again, and then all the people who couldn't stay then go over to the better neighborhoods, stayed in the hood. That's how we got the hood. So, but we had our own banks. My uncle from Kansas City, my Uncle James, he's in Kansas City. His name was James Moore. He owned 2 grocery stores in the 50s in Kansas City. And that was not uncommon at all. My father would go come up with the books. My father was kind of a brainiac, I didn't get that part. But he was, there's a rich history of people that were doing great things in those communities, drugstores. You had to come. Even in Compton, when I moved to Compton, all the doctors, everything I needed was in Compton. After white flight, everything I needed was there. We didn't have to go anywhere. So then gradually, things started leaving. With the doctors, all the stuff. Everybody lived in the community. But that's another whole story.
and you've got a story to play for us, I think.
You?
You do.
This time?
I think it's a good time.
I hope I made any kind of sense, because clearly this is a very this is a tough crowd. Yes. So I'll play this song.
Yeah, that'd be great.
Okay. This song was written during the first Trump administration, and it was about, but it didn't catch on until they skipped Biden, and it caught on this time. All right, that'll be all right. And I call it "This Is My Home." It was written at the border, when the people were coming up, crossing the border in Texas and New Mexico, and their children were being taken away. And that really pissed me the F off. It was really like, that's bad. That's bad. Okay, immigration and sneaking into a country is one thing, but taking people's children. Even my good friend from Virginia Beach, who was an NRA Christian Trump supporter, didn't like that. So anyway, this song. Can I play this song for you? All right. I'd like to thank Ed for giving me this opportunity to speak with you on the evening. All right. Ready? Here we go. Luby came here from Mexico about 3 or 4 years ago. And the journey was long. She got a job in a local factory, send money back home to her family. And she said, this is where I belong. She said, this is my home. This is where I belong. A man arrives from Pakistan, a stranger in the promised land. Mohammed, is finally free. He drove day and night in a taxi People got mean, he didn't get mad. He just said that this is where I belong. He said this is my home. This is where I belong. La la, la la, la 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 la, la 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 la, la 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 la. Ruby had school on Monday night. When a man walks in who looks just right, Mohammed and Ruby, they were falling in love. And they raised a beautiful family, taught them all their history, and they know that this is where they belong. You see, this is their home. This is where they belong. Now my people came over from Africa to North and South America, yeah. And the journey was long. Well, they sacrificed and they paid the price, so I could live this wonderful life. And I know that this is where I belong. This is my home. This is where I belong. La la, la la, la la, la la, la 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 la, la 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 la. This is my home. This is where I belong. This is our home.
We're so glad to be joined by Thomas and Winnie today. Thomas is a managing director at Insight. Winnie is a founder of Strobe. So let's start with that, because Strobe is pretty new, right?
Yes.
It's a spin out of Block Tower.
Yes.
You took a couple partners with you. Tell us about
Yeah.
Strobe, the decision to start it, and how it's been going.
Yeah. Hi, everyone. Thanks for having me, first of all, Meredith and Ed. It's great to be here. My name is Winnie, and I started a new firm called Strobe Ventures about 2 years ago, late 2024, with my two partners, also named Thomas, K, actually.
Oh, funny.
Yeah, so your initials, and Steven. So I was previously at a hedge fund called Block Tower Capital, of which it was a digital assets focused hedge fund, and I was on the venture side, so I helped manage, deploy, raise that fund, and because of a number of reasons, our hedge fund got merged with a different hedge fund, and as part of that merger, we were tucked into it initially, but we didn't want to go into the new acquiring firm, so we basically raised our hand and went to all of our LPs and asked to be spun out, and thankfully, because we ran a pretty independent fund, we're making decisions ourselves, and we're kind of managing the book ourselves. 99% of all of our LPs at the time, it was during Christmas too, so it was quite stressful getting the consent there, but 99% of our LPs consented to letting us spin out. So we effectively took the unspent capital of the fund, all our portfolio companies and our LPs, and then we spun that out into new funds. So it's quite unusual structure in the sense that we are a 2-year-old firm with a 5-year-old fund. But essentially, last year now, 2025, we started Strobe. We managed about $250 million of capital, focused pretty much still on digital assets, a little bit of AI, a lot of what I call emerging tech.
And what's been surprising or challenging?
Yeah. I didn't appreciate, I was previously at 2 other venture firms, and I'm sure you know, at an Insight where you have such a platform and foundation, I didn't appreciate all the work that goes into running a fund that lets us, you know, do investing. Before that, like, I was always like, the most important job is like, you know, finding the right companies, picking the right ones and investing. But since transitioning to this role, it's been interesting because, you know, my day now is like, I would say 50% investing, half of it is like fundraising, obviously, and then a lot of it is just like admin. Like, we didn't get paid for like a month, and that was 100% my fault because I just did not set up the HR. You know, like, it was these things that you don't think about because you're like a 3-person firm. And a lot of founders in this room, I'm sure you like, you know, kind of relate to that. But there's so much of these like admin, legal that you have to deal with that I didn't appreciate.
So you're wearing all the hats, but you're also an incredibly successful investor, and you're a prolific producer of content. You co-host a podcast, you write a ton, and one of the things you've written and talked about is how you're differentiating Strobe from other crypto investors and things that crypto investors are getting wrong. I think you called it the 7 deadly sins.
Yes. Yeah.
Can you tell us about that?
Yeah. So when we started Strobe, we looked around at a lot of, you know, the crypto landscape, and I think 80% of you in the room are probably like rolling your eyes. You're like, oh, it's a scam. You know, like FTX, like, you know, you hear all these like headlines. It's quite scary. And, you know, have never been more convicted in an asset class, in technology, in kind of what I'm doing. And there's like a lot of peers are kind of more short-term sighted. So basically we set out with like almost a mission statement of like, you know, why this new age of crypto venture firms are different. And we basically laid out like 7 deadly sins, like you know, connected to like greed, and a lot of the traditional deadly sins, and why, you know, we kind of take a more long-term approach. We treat crypto investing very much similar to like equity investing. There's just a token involved. We really like to be long-term partners to a lot of our companies, and we believe in kind of the asset class, just replatforming how a lot of industries kind of operate.
Awesome. That's great on background. I appreciate it. And so, Thomas, you've been at Insight your whole career, haven't spun out a new fund. Tell us about, and before that, you are an astrophysicist by training. Is that right?
That's true.
Tell us about how you got into venture and what approach you're taking at Insight.
I was looking through a telescope one day and I saw Insight. Yeah. It's kind of what happened. I had an amazing physics teacher in high school, and I went to school and I was really fascinated by it. And it kind of one thing led. I had a great advisor who got me involved with research, and I started studying. And a lot of like actually astrophysics and astronomy, I was just interested, intrigued, learning what are the bounds of what we know about the universe. But a lot of it actually involved computer science, and we were doing machine learning and kind of like the lab and doing it like big data when that was like a buzzword at the time. And I kind of got to the edge of it, and I was like, wow. So turns out we really don't know anything about anything. It's really what I learned in physics. But I happened to meet someone who worked at Insight. Insight was doing a lot of recruiting out of Penn, which is where I was going to school. And it turned out that a lot of the work I was doing in with machine learning and software was super relevant to where Insight invests, which is primarily, I mean, it's multi-stage, kind of strategy, both minority growth investing, venture, as well as buyout, and with a lot of sector focus in certain areas, especially infrastructure, software, and cybersecurity, which is where I spend my time. So having a little bit of an edge and a technical edge from that experience is kind of what brought me there, and I've just been there ever since.
And I was watching a clip of you being interviewed by someone who's a way better interviewer than I am, or no offense, than we are, Dominic Midori Davis, who's sat here as a panelist you recently spoke to, talking about how you're investing in 2026, and all the questions are about AI, which in and of itself is not your focus, Thomas, but I know it's impacting all the companies in which you invest.
Well, everyone's got to be an AI investor in this day and age, right? So, no, look, I mean, if you're presenting and going into that investment committee meeting in the Lion's Den and you don't have a thesis for why the company you're pitching is on the right side of a lot of these trends, like, good luck. So, I mean, that's at the very high level. I mean, a lot of the companies that we've invested in that are horizontal application layers, like, that's a tough space to be in. But, you know, I still have tremendous conviction in the sort of last mile and the complexity and vertical vertically oriented software, as well as kind of like the technical complexity of cybersecurity and sort of like back-end IT infrastructure where we play, where I think that's going to be a pretty enduring moat. So still, like, you have to have some deference to why it's not just moat and defensible, but also there's going to be demand trends that drive from it.
So there's a lot of complexity in the types of things that you and Winnie are talking about investing in, whether it's crypto or investing in things that are moving on-chain or bringing things on-chain. But there's a much more basic level at which you're both investing in trust, it seems, right? Because you spend a lot of time in cybersecurity, and Winnie, you're looking for companies that are doing things that involve sources of truth. And maybe we can talk a little bit about how you're investing in trust and why you think trust today requires so much capital, because you've raised a lot of capital.
It's funny, we actually were doing a rebranding for one of my companies, and like their whole thing is like the digital trust layer. I was just like an hour before I got here, so absolutely, no. I mean, look, at the end of the day, you know, whether it's blockchain or with infrastructure, like there's a lot of uncertainty out there in software and how these systems behave, and like there's this black box nature of AI, which I think is going to create a lot of kind of issues downstream once you wire all these systems together, and they're supposed to be making decisions autonomously. And you know, I think there's a lot of value to be created in terms of how you define what those agents can or cannot do, and how these systems are going to interact with each other, and ultimately, you know, the cybersecurity and defensibility of like what these systems are going to be capable of impacting. So, I don't know. What do you think?
Yeah, I think it's interesting because with AI, the inverse of that is like it's very much needs crypto, because how a lot of agents kind of autonomously transact today, like they can't use a lot of like traditional payment rails. So if you think about kind of our strategy when we invest, we traditionally in the last 5 years have not focused too much on kind of the agentic world, but now we're seeing a lot more crossover with traditional funds like you guys, because we're seeing that's like agentic finance really blow up, agentic payments. So like in some ways, kind of like what you're talking about, figuring out what part of the stack, you know, traditional banks, the Stripes of the world kind of own, and where can companies kind of operate within the value chain and kind of create either these trustless systems that people can kind of autonomously transact is quite interesting. And we're spending a lot of time there too.
And are you, so Winnie, you're doing things that are also like looking for a source of truth when people are trading artwork,
Yeah.
for instance. Can you talk a little bit about
Yeah.
WAG?
Yeah, so one of our big thesis when we started Strobe was how crypto and on-chain rails and even agents are going to re-platform different industries. And what we mean by that is we firmly believe that, you know, blockchain rails, stablecoin rails itself will re-platform how Wall Street works, will re-platform what we call how Sotheby's, the unbundling and the re-platforming Sotheby's, how e-commerce works overall. So the Sotheby's one is a big thesis of ours, and I don't know if you guys know this, but a common, you know, if you're selling something at Sotheby's, whether that be artwork or jewelry or a watch, they're taking like a 35%, you know, cut on it, and it's an incredibly inefficient process, and it's just hard to resell, it's hard to authenticate, and they're just, you know, it's a legacy kind of model and auction house, right? That was built for like 200 years ago. So we had this big thesis on kind of re-platforming Sotheby's, and we invested in this company called Winston Artery. So Winston itself is an art appraisal business. They basically appraise art to probably 35% of the world's billionaires and art collectors. So it has a strong book of business, kind of just praising, you know, the Picassos of the world and really fine art. We, you know, invested in that company, and we merged it with an art financing company called Artery. And together, what's so powerful is if you have like a Monet at home, or if you're collecting art, you're now able to tap into like liquidity in DeFi, which is decentralized finance. You can take a loan against it without really selling your art. It really unlocks new types of liquidity, new types of financing for an otherwise very illiquid asset class. So we believe that is like, you know, as more things come on chain, you know, art is coming on chain, and we have another company called Baxis that's doing for like a whiskey and, you know, wine that does the same thing. It's basically like a marketplace. I know, Ed, we should get you on it. I was telling the founders about.
How do we know the provenance of your Grand Cru for later?
Yeah,
You don't. You have to trust me.
yeah, so it needs to be on chain. We should get some of your collections on it. I mean, I don't think you want to sell it, but me and Thomas were talking about it.
I am available for endorsement deals.
Yes.
I'm just throwing that out there.
But, you guys don't know Ed's a huge wine collector, and, every time he has a dinner, there's always a sample of 30.
But
Allegedly good. I don't know, but they're not verified.
Yeah, they're not authenticated, I don't know, we can't.
You gotta
really-
authenticate them
Yeah.
on the chain.
It's gotta be, it's on Solana,
yeah,
blockchain.
because if it
so
doesn't happen on the chain, it's not real.
It's not real, yeah,
So you hate Sotheby's and Christie's.
we hate it.
You do.
We hate Wall Street, I'm kidding. We believe there's, it's so, a lot of things how traditional finance, traditional art, these industries operate are extremely inefficient. And we have a strong thesis that we can cut a lot of the middlemen by putting it on chain.
And while, a Monet is not that relatable necessarily, I don't know, raise your hand if you have more than one Monet. Leave them up, okay. Yeah, thank you, we'll talk later. But the art market also goes all the way to emerging artists.
Yes.
And sometimes those emerging artists emerge. And the whiskey and wine market, now we're talking about purchases that are $200 instead of $200 million, a little more relatable. So there's an extent to which you're investing in consumer, and you're investing in consumer at a time when in venture, it's super out of vogue to invest in anything consumer. So maybe tell us why we should think that's a smart thing to do,
Yeah.
and then Thomas will tell us why Insight is not doing that.
Yeah, well, first of all,
We're taking all of our consumer investments and taking out loans and just buying GPU processors with them, so
have you
that's
seen Allbirds?
Yeah, exactly.
I was like, well, that playbook is with stats for crypto last year, right?
Oh, really? No, I didn't.
So basically last year, there was like sidebars,
Super
but there was about 10, 15 of these legacy companies that were dead, and then people just were like, I'm just gonna do the Michael Saylor strategy where they buy a ton of Bitcoin, buy a ton of Ethereum, Solana, and then the stock price of all of these dead companies, which is 10x. And we're seeing it now in AI, because if you guys didn't see yesterday, Allbird essentially just completely got rid of their shoe business, and they now are buying GPUs.
It was worth nothing. I mean, it went to practically
It was
zero.
$30 million.
They took a $50 million loan on whatever remaining assets they had and then called it GPU.
But I don't understand, aren't there still venture investors who need to buy sneakers? Isn't that what their whole market was? No?
Yeah.
Okay.
We pivoted to,
But why does
Oh,
it make
yes.
sense to
On-running.
why does it make sense to do consumer tech investing? Because most people seem to think it's a
Yeah.
really bad idea. And it's companies I don't want to pick on Allbirds or, but maybe that just wasn't a venturable thesis. But you think it is.
Yeah, first of all, I think it's really lazy to say consumer is dead, because we are all consumers here, and we are all big, have very high purchasing power, and we're spending and using applications on a daily basis. And to say that consumer is dead and we will not use new apps in this new paradigm where there's it's easier than ever to build apps is quite lazy. The second thing I will say is I've never really done things that are in vogue. I'm investing in an asset class that people have written off, and I'm also focusing on a sector that hasn't gotten as much attention. But I guess why I am very excited is with every decade or so, there's a new paradigm shift with the new technology that enables consumers and now agents to transact differently. And I think more broadly, with this, we are seeing more and more builders being able to spin up new companies in less than a day, right? And to think that there's not going to be new experiences and new primitives that are being built out of this would be silly. So personally, we are still very bullish. Prediction Markets, I think, is a type of consumer crypto company that has found product market fit beyond just crypto. We invested in Polymarket back when we were at Block Tower in 2019, and to kind of see it now become, at first, just a consumer, a place for a source of truth, but now to see it integrated with all the, large labs and LLMs and be almost a source of truth for people in hedge funds and large funds and insurance funds are like hedging their positions is kind of cool to see. And a lot of times I personally think the best consumer apps all start out as kind of toys. They can be very fun, they can be games, or they can be kind of like a bit casino-like. But then from that, you have these very interesting institutional, products that are being built on top of a poly market or a Kalshi.
Can we back up for a sec
Yeah.
to talk about prediction markets being a
Yes.
source of truth as compared to other things that you said were casino-like?
Yeah.
Can you dig into that a little bit?
Yeah, so I'm very excited about prediction markets, and I think it's, one of the things in the last 5 years that people kind of view as betting, right?
Sorry, did you say that people view as betting?
I think a lot of the brand right now that Kalshi is pushing, I don't know if you guys are investors in Kalshi.
No.
Okay. That Kalshi is pushing is quite dangerous, right? Because it's like bet on everything. They're pushing, Gen Z. There's like a loophole right now where I think if you're under the age of 18, you can make predictions, but essentially you're betting on like Taylor Swift, when her next album's gonna drop, who's gonna win, whatever. And traditionally, a FanDuel is not able to service a lot of Gen Z or Gen Alpha because it's considered, gambling and casino-like. So they've kind of found this loophole, and they have the CFTC approval to kind of do that. But I think what's interesting is I do think it has become a source of truth. Whether we like it or not, I do think prediction markets called last elections before, like 3 hours before a lot of news media have called it. In the Grammys, we just talked about the Grammys earlier, but we're seeing prediction markets being integrated into the odds when they're live streaming it. It's cool to see when you search on like a Claude or a Perplexity or a Gemini, kind of the odds for certain politics or certain live events or weather. And so it started off as like, people say betting. What's cool now is I'm seeing a lot of like insurance tech companies being built on top of these markets. What I mean by that is like a recent company I actually saw was they're building like a traditional B2B insurance business, selling directly to like event planners like a Coachella or a music festival. But, they need to like basically hedge out, say if it's raining, hedge out the weather. But they currently don't have the opportunity to do that, and they don't know how to access prediction markets to do that. So they purchased an insurance product, and then the insurance company will basically hedge it on the poly market. So there's different ways to kind of build more interesting institutional products now on top of prediction markets, which is just a market for exchange of information.
What would you say about the insider trading part of it, though?
Yeah, I think that is, I feel like regulation always comes after, any new advancement of technology. So I do think we're going to see in the next year or two some more clarity on what that looks like. But don't you think the insider information part actually contributes to the source of truth?
Well,
Like,
I was going to say that,
Yeah,
actually.
right, but
It's
it's like one of those
look,
things-
if you're taking the bet against someone at the Pentagon who just said, Nicolas Maduro is
Yeah,
getting taken out
yeah.
tonight, why are you taking that bet? And it's like,
Yeah.
now this information is out there and it's
cool.
accessible.
And what's cool is like there's people so like some of the top hedge funds in the world, they used to hire like weather analysts. They pay about like $2-3 million for these weather analysts to figure out like the weather for, as they trade commodities. But now they just use a poly market and they are hedging their positions on the weather on a Kalshi or poly market, which is pretty cool.
Yeah, the Department of, we're still calling it the Department of Defense despite the other crap, right? The Department of Defense stuff is tragic, and I do wonder, once we actually return to norms and integrity and, I do wonder how that's going to change these things. You said that, you can consider it like betting. It's absolutely betting. We are in a complete non-enforcement posture, and therefore, they're allowed to proceed. I'm not like moralizing about the existence of something like poly market or
Yeah.
Kalshi, like that's fine, but we should call it what it is. It's going to the track and putting down some bets. It's fine,
Yeah.
but that's what it
I think
is.
we're in what I call like the degen, squarely like consumers are in what I call the degen economy. And poly market and Kalshi was one expression of that. And I think it's a function of how people are just, it's like financial nihilism, or people fed up with, where inflation is, how they can earn money, kind of the changing of kind of Asians coming and AIs taking over people's jobs. And another expression of that is like, even like Labubus, the growth of like Labubus last year, like that's another, like people were betting on that. And even just like kind of popular like Whatnot, which is like a social life, it's all betting.
So I want to go back to the consumer comment, though. because you said, everybody in this room is a consumer. That's very true. Everybody in this room buys groceries, everybody in this room buys airline tickets, presumably, or most people in this room buy airline tickets at some point. I would not want to be a venture investor in a supermarket or an airline, but there's a ton of revenue there. It's just, I don't like the margin, I don't like the outlook, right? So why is this still, like, there may be some pieces of it, of consumer that make a lot of sense, but we've also just seen somewhat apocalyptic series of events and all of these companies that went public trading at a fraction, a tiny fraction, a scary lawsuit-riddled fraction of their IPO valuations.
Yeah, I think that's largely true of like the 2010 era of you're thinking like D2C brands, right? I think now we're in this era of like more traditional CPG is kind of what you're thinking. We're in this era of creator-led brands, which I think for everyone that you can name that went tragically out of business, like Allbirds and Casper and those, I can name a celebrity brand that's doing really well, like Skims and Rode, right? I don't personally focus on those, but to your airline example, I do think like, yes, you're not going to invest in airlines, but like in grocery stores, but will you invest in ways to better purchase airlines and better purchase your grocery, like an Instacart, but what's the next version of that? And that's kind of what we're excited about.
And so you did do this post last year where you said that there are 3 winning formulas for consumer, and then I do want to hear the inside take on consumer. One is ridiculous ad spend, and you gave a stat that is like stunning, 30% or more of like every consumer Series A or seed round is going to ad spend, which for these kinds of companies. So ridiculous ad spend, celebrity creator-led, cult-like community.
Yeah.
And you seem enthused about building cults.
Yeah, I think cults run the world. I think it's all one of my life goals.
Okay, what's going on in cult building world at Insight?
Well, that's a weird question. Look, I mean, we've done consumer. I mean, I think one of our better recent investments is Quince. So, buy their cashmere sweaters if you haven't already. They're very affordable and high quality.
I hear
Fast
their
fashion.
ads.
What's
So
that?
I hear their ads. Thank you for supporting so many podcasts I listen to.
Okay, I had nothing to do with the investment, but farmer's dog as well. So people spend a lot of money on their dogs and pets. But look, I mean, we've always had an open mind as a firm to keep a broad enough mandate that anything that is technology enabled technically can fall within the Insight umbrella. And that's this core value we have about just commitment to continuous reinvention and always wanting to keep an open mind to what, the art of the possible could be, this appetite to take risk. But ultimately, 80% plus of what we're going to do is going to stay squarely in the world of software broadly defined. And, I think we've made some bets that you could argue fall on the, even on the spectrum of prosumer. So I'm on the board of a company called Bolt.new. It's a rapid website, prototyping, design builder, tapping into kind of the vibe coding market. I mean, the plus side of consumers, these things can grow very fast. But, it's also the long-term viability. It's also, that's a question we all have to reckon with. So it's a lot less easy than simple, plain software as a service. And it's even easier when it's cybersecurity and something you're not going to make a rash decision to rip out, every year or every,
But
month.
is software investing easy now?
Ooh, now we're getting spicy. Yeah, no, I mean, you're just going to vibe code your CrowdStrike, right? You're going to vibe code your HR app to do payroll, right?
We have 3 members of our team, and we have 20 agents at Strobe, and we've vibe coded all of it.
And who's going to maintain all of that?
We have an agent managing and maintaining.
And who's managing that agent?
Me.
That sounds scalable. No, I mean, I don't personally subscribe to the view that like everyone's just gonna, this notion of totally compostable software and everyone's gonna vibe code every application. Like, look, there's an element of that that's gonna absolutely manifest. What that looks like, who knows? I don't know. I don't think anyone actually authoritatively knows. But what I will say is like, people don't buy software just because it is code that is prepackaged. There's absolutely an element of trust that comes into why you buy software from a vendor, and maintenance and overhead, and I think great products at the end of the day require a lot of, like, you have to understand the nuance of the last mile of the problem, and that is not going to go away just because you could theoretically build it. The bottleneck has never been the building the code and the prompting.
So back to betting, because I mean, that is what you do for a living. Tell us about your best bet. Great exits. I know you have some at Insight lately.
Yeah, I mean, look, it's always fun to talk about the winners. Look,
We can talk about losers too.
No, those are also fun in a way, just more painful. So we had a big outcome at the end of last year. We announced acquisition of Armis, which is a cybersecurity company for asset and IoT. Security is being acquired by ServiceNow, $7.75 billion all-cash transaction. That deal started when the company was about $7 million of ARR. We lost the deal to Sequoia. They invested at a $300 million valuation, but I begged the founders to give me a $5 million allocation alongside like the legendary Carl Eschenbach to like let us invest. And part of it was, I think we jumped on a plane, we showed the kind of initiative that them as founders show when they're trying to win deals, and that kind of game, respect game, sort of cultural alignment was very apparent. They're young, first-time founders too, so there was an element of just, we very much got along, and that vibe was positive. But Insight has a super powerful platform, and what we could do to help open doors to chief information security officers. I remember we introduced them to the CISO of FedEx, which went on to be a very large and strategic customer for them. So, that extra level of hustle, empowered by a large platform brand, gave us the opportunity to carve out that $5 million allocation. And then they continued to crush their numbers, and I continued to cry and wish that we had gotten the full deal. But by the end of the year, some of their investors were thinking, this company's absolutely like crushed it. There's some strategics poking around. Maybe they should just declare victory. And what I think Insight, this is again, credit to our very scrappy nature and kind of wanting to always push the boundary of what it means to be like a venture capital or private equity investor, is we said, don't sell to a strategic, don't go raise another round. You can sell the whole company to Insight, and as founders, they can re-up and they can have an amazing life-changing liquidity event, but they can remain as founders and keep building. For the investors that want to chalk the win, they can get that. And for those that want to keep going, they can roll and keep going and get the upside. And we ended up buying the company for about $1 billion. The company was 25 million of ARR at the time, so this is 2020. So it was starting right when things were starting to get a little bit, multiples were kind of crazy town, but not insane. Their forward forecast was 75 million, so it seemed like forward 12 times ARR, not crazy. Then COVID hit, and they ended up way underachieving that. So I thought my career was on the line. But all's well that ends well. They ended up having an amazing bounce back after things reopened. And ultimately, we had this outcome, which I think, I was doing some math earlier, I think it's one of the largest capital gains in Insight history, including our co-investors that came into the deal. But it all started from that kernel of just that extra mile of hustle and, us kind of showing up and being there. And by the way, at the time I was, 29 years old. And I was like, this is going to be how I make partner. You have to let me into the deal. That was my line. And they loved it. And it worked. I made partner and, here we are. So.
What was the craziest thing Insight has ever done to win a deal? I've heard some funny ones from.
To win a deal?
Yeah, to win a deal.
I don't know. There's some funny things out there. Like, there was one company, it was like a video creation company, and they created a video that went semi-viral within the platform. And the video was like, let us invest in the company. Yeah, it was like.
I've heard some people did in our role for OpenSea, they minted an NFT with the term sheet.
Right, yeah, that didn't work out so well.
Worked out well for the founders, but.
Right, exactly.
What have you done, Winnie, that's crazy? Or what has Strobe done that's
No,
crazy?
so we're like obviously much smaller, so I'm very curious if these big firms with unlimited budget, but we lost a deal actually to Rivet, who flew out their entire partnership to Paris to wine and dine these founders, and it was just me,
What?
the other Thomas.
Look,
What a
I'm not a
hardship
big fan
that
of
must
the
have been for
whole,
Rivet.
like,
Yeah.
oh,
And,
okay, the firm flew in on PJs and took you out to a Michelin meal. It's
Yeah.
like, if that's how they're deciding which partner they want to go with, then they've self-selected out, and that was a good decision. Like,
It was one of those things where like we're a 3-person team, brand new firm, we just didn't have the resources. I'm always very curious what like larger platforms, how you pull out the stops.
yeah, it's
Ours is
not
more
bad.
personal, I would say. It's completely different. We don't have like a playbook like that, so we have to rely more on our network and kind of show up in person and.
But that's what we win too.
Yeah.
I mean, look, I think those grand gestures, they're kind of at the end of the day a little bit gimmicky.
Yeah.
It's like, are you gonna
That's
marry the
kinda fun.
person that like did the weird like skywriting like proposal to someone you're actually in love with, you know, like.
Yeah.
So let's talk about
I don't know, maybe it's not a rhetorical question, so.
some people are right now reevaluating their relationships.
They're like,
So Insight also has another massive outcome with Wiz. And you also just gave a multiple of 12 times ARR. And it seems like, there's different information about Wiz, and the deal took, there are versions of the story where the deal took more than a year, but the deal certainly took at least a year. And it seems like for $30+ billion, there's a 42-ish times multiple on revenue, which is less than half of the multiple we were seeing on valuations in 2020, 2021 in venture deals. Is 42 times revenue is that an attainable thing if you're growing rapidly?
Well, the saying we have internally is, we don't overpay for companies, management teams just miss their plan. So it's, if
It's not your fault.
But no, it's more and more, in other words, like if the company grows 3x in that 1 year, then all of a sudden 42 times doesn't seem too expensive. It's actually could be quite cheap. So, and as I understand it, Wiz has continued to perform exceptionally well, even since the acquisition, so.
Even since the acquisition, which closed like last month, so.
Right, or
not-
since it was announced and whatever, so.
Yeah, I guess the question is, are we seeing the kind of, because there's definitely been a recalibration in the marketplace. And there is this duality of valuations now where you have deals that are super hot, let's call those AI deals, maybe mostly in San Francisco. And then you've got kind of almost everything else. I don't know, Winnie, if you agree or disagree with this bifurcation of the market. And we're seeing, we are seeing a whole bunch of deals that are in the 20 to 25 times revenue kind of multiple. You talked about a 12x revenue multiple, which sounds so much more sane. The idea of 40 or 45 times revenue at this kind of massive scale, it's the largest M&A deal. I mean, congrats, it's the largest venture-backed M&A deal ever, right? Like that's a really big deal. Are we starting to see with these, deca-billion-dollar M&A deals in venture, is this something that you think, like, yeah, there are these companies that have these incredible opportunities to achieve these kinds of multiples?
I mean, you say all that, but it's like Anthropic and OpenAI added more net new ARR last year than every single public software company combined. So like the rate of value creation is like massively unprecedented.
But that's the thing. Anthropic is an AI company and Wiz is not. And I mean, so one of your CEOs wrote this lovely thing about you. This is the CEO of Pantera, where in January 26th, they posted, receiving the Insight Partners term sheet in 2020 in the middle of COVID felt like being admitted to Harvard, which I understand is a school in Boston. We were oversubscribed, but choosing Insight was easy. Thomas Crane, Filene Huzing, and the team had a proven eye for category leaders. They believed in us leading the security validation revolution, and today that revolution is real. And this post comes in after it's announced that Pantera hits $100 million in ARR. You invested when they were below $5 million in ARR. Like, great job. That is your job. That's fantastic. There's another post that he put up a couple weeks later where he said, yes, we're not a native AI company. That's okay. Don't be panicked. And part of the question is, we're in a world where venture investors are, and LPs in funds are discussing the death of SaaS. And so it's one thing for all of these AI companies to hit escape velocity on valuation, but a company like Wiz isn't. A company like Pantera isn't, and the valuations should be more rational there. Are we starting to see some exuberant valuations?
I mean, look, you just, in general, like, I do agree with the bifurcation of California as its own beast, and I think Insight is always going to be positioned as like, we're finding growth, technology, software opportunities pretty much everywhere outside of California, with some exceptions, so we will occasionally play there. But that, you know, again, like, these new technologies, i.e. LLMs, AI, like the opportunity for incumbent software companies, be it cyber, be it vertical SaaS, to leverage and take advantage of this to then add, you know, new products. I mean, all of a sudden, companies are reinventing themselves in incredible ways. And, you know, the problem you thought was a block down your street, you can now actually put it into your own platform because of how fast you can prototype, iterate, and get access now to new markets as an incumbent with an advantage. Like, we believe that will create some durable value creation, and, you know, ultimately, like, if you're not taking advantage of that, so Pantera might have said 2 years ago, you know, they're not an AI company. Well, there's now been a dozen AI pen testing companies that have been kind of hit the markets in the last 6 to 12 months, including some very high profile ones. So if they're not, which they are, but if they were not attacking that opportunity, then shame on them. And, you know, I think maybe 2022, it wasn't as obvious that that opportunity is going to be available to everyone, but it's now become massively democratized in terms of access and the ability to leverage it.
And so one of your partners, Ryan Hinkle, had this comment at the end of last year: AI is net positive for SaaS as a market. And the question is, which companies lose to the kids in a garage rebuilding their product AI first, and which ones unlock new revenue streams with AI? Is AI net positive for SaaS companies?
I mean, I personally believe so, but if you look at the public markets, and you might be surprised to hear this, like the number, i.e. the total, like the cohort of companies that are showing acceleration, i.e. like more than 2 quarters of consecutive increase in revenue growth, like that cohort of companies has tripled in the last like 1 to 2 quarters. And so you can see it now in some of these incumbents that have done a good job in incorporating AI into their existing platforms and then taking advantage of like the larger market opportunity, because there are a lot of dollars that are being deployed to AI, and IT budgets writ large, if you include AI, have absolutely expanded because every single enterprise needs to be buying AI, and they're not just buying it from Anthropic and OpenAI. Certainly, those guys have benefited quite a bit, but that is not going to be, I think, the sort of like the copyright for the foreseeable future. So now, on the flip side, it is very difficult for a large incumbent software to make that transition to becoming an AI-first company, and that's where I think there's also going to be a wave, a flurry of strategic activity in M&A, where they need to source that kind of innovation and product DNA from the outside. We worked on a deal recently that had very much those kinds of elements. And yeah, and that's where it takes a product-oriented founder and executive team, which that can be challenging DNA to insource unless you've got a really strong commitment to it from the top.
One of my recent mental models for kind of founders who are like nimble enough to be AI native is like founders who've had like, 5 to 10 years of experience in an industry, whatever they're trying to solve, but still willing to re-architect how those systems behave, so they're not like so tied to how things have been done, and they can kind of be able to rethink how to build something entirely new from ground up using like agents and using AI tools, which is quite hard of a muscle to flex. Because sometimes you would think in the past, a repeat founder who sold the business in this, they probably make a good architect to build something similar, but I don't know if that's true anymore.
Yeah, the best execs, it's like, oh, we did it once.
Yes.
We sold the version 1.0, now we're just gonna do it again, but better, because we kind of learned from those mistakes.
Yeah.
But I totally agree with you. It's like the ones that are doing well are the ones that's like, I'm super close to the problem, the domain expert, and that's where I think that, again, it's the founder DNA, which is so critical to this, and in these large late-stage public and, late-stage private, often like highly levered companies, like that DNA is not as present.
So you're both having conversations with LPs. We're not going to talk about why, but we should take it for granted that venture investors get money from limited partners. That's who invests the capital that the venture funds then deploy into these startups. Or put another way, I'm not asking if you're fundraising. It's your job to be talking to your limited partners. How are limited partners in today's environment thinking about investing in funds, allocating to funds in crypto, in blockchain, allocating to a fund that says we do stablecoin-based investing or stablecoin adjacent stuff? How are they? What's your experience, Winnie, in how LPs are thinking about how to allocate in this wildly volatile market?
It's interesting because it's also like a tale of two cities, I would say. I think with LPs that have traditionally invested in crypto funds back in the 2021-22 like hype cycle, they largely have not seen any distributions from crypto yet. So they are very apprehensive to kind of reallocate, which is crazy because things could not be more bullish on the macro level with kind of the Genius Act and the new market structure bill and kind of all these institutions, the Morgan Stanley, JP Morgan, all these large institutions coming on chain, Apollo kind of deploying some of their credit funds on chain. So from like a macro perspective, it's crazy because things in crypto are finally working. But then a lot of these allocators are apprehensive because they haven't seen any dollars, so they can't reallocate back. But what we're seeing is because a lot of these financial institutions and fintech companies, these neobanks, they all want some type of stablecoin play. They end up being a lot of, some of our current targets for LP conversations because they are in a very acquisitive, mindset and they want to get access to some of the earliest protocols and founders who are building the space.
What are stablecoins?
Stablecoins are a digital dollar, you can think of it.
I have a follow-up question.
Yes.
What are meme coins and why are they good for anything other than bribing the government?
Meme coins, so stable coins are, just to explain, is backed by a US dollar, and it's just a digital equivalent to that. Just in the same way that when you send a text to someone in Germany right now, you expect it to land within seconds and it to arrive and it's free. I personally believe if you can send $1, it should be able to be free, instant, and efficient in the future. Today, that's just not the case. If you were to send $1 to someone in Myanmar, that'd be impossible. So stablecoins and stablecoin rails enables that. I think it's very clear. There's a lot of use cases why within financial institutions, within trade, within e-commerce, why that's very critical. Meme coins are a mimetic digital currency that oftentimes involves like certain communities, certain memes, and I personally think it's a form of capital formation. And going back to what I was saying, a lot of things start as toys and gambling. What looks like a meme coin today, I actually think could be a very effective form of capital formation and a very quick way to raise money in the future. So meme coins, I think, were like the earliest evolution, and V1 really much looks like, Trump coin or like these silly little meaningless memes, right? But we've, in the last few years, have seen, the evolution of that into something else. For example, we've seen kind of new startups with 1 to 2 person teams be able to raise millions of dollars, almost in a Kickstarter-esque, way, using a meme coin. So, for example, if you have a crazy idea for something and you don't know how to, go to like an Insight to raise money and find Thomas, you could
We
post,
find you.
you could post a crazy like launch with kind of the tools today, like a crazy video, get some hype on Twitter, TikTok, and you could, if there's enough interest, you could raise money through a coin, and it's a form of capital formation. So I think we're going to start seeing different evolutions of basically tokens to be used for more than just gambling.
Yeah, or if you're like, I don't know, a sovereign and you want to get some approval from some other country and that other country's president has put out a meme coin and you wanted to like spend $500 million to buy whatever regulatory approval you needed, you could like invest in a meme
Like a
coin,
gold,
which is very
yeah.
different than a stable coin. Stable coin's
different,
good. Meme coins easier to facilitate bribery.
You
for
get
instance.
it. You get. We should bring
Yeah.
you to our LP meet, our LP pitches.
I'm in. Okay. And
Don't ask me about these.
Thomas, what is the mood or how are you seeing LPs scratch their heads over, can we allocate everything to you getting us into the next Anthropic, because we really like the idea of getting in at 15 million pre and exiting at $1 trillion?
Yeah, I mean, right, there's like this whole consensus, like thing that was on Twitter a day or two ago of like 75% of investors have invested 75% of their companies, or 75% of their capital into like 5 companies. It's like 5 investors in 5 companies or whatever, and that's like where all the value creation has happened. Like we're trying to be, by the way, most of the other 25%, not just like the consensus part of the market. And there's that's actually still a very large part of the market, and I think like we'll see if all of these consensus investments end up playing out well or what. At the same time, like what LPs really want to hear is just the truth. Like they don't want to hear, oh yeah, like software, it's gonna be fine. Like everything is perfect. We know exactly like how this is gonna play out. Because it just, it's bogus. Nobody really knows right now. Things are moving so fast. So having a real conversation about like what you're seeing on the ground, what you're doing to get ahead of it, and how you're showing up for your companies, that's all it really takes.
So go back to the consensus companies that are soaking up all of the capital and where everyone like is desperate to get in. If those 5 companies, which account for hundreds of billions of dollars of capital at this point, if those 5 companies, like, I mean, unclear that all 5 of those companies, truly work, and then take from the next tier of companies that are private $100 billion plus valuation companies, because there's now a whole tier of these centaurs, right? When those stumble and fall, or even worse, when those become the next WeWork or the next, I feel like we picked on Allbirds too much, but what the hell? How screwed are the venture markets?
No, I mean, venture markets are used to there being zeros. I mean, that is
Not at this scale.
Look, it's fair, and I can't tell you, and there's a reason we didn't invest in the models early on, is like nobody really knows what the long-term economics of those companies will be, nor the long-term moats. I mean, it's like distillation and these open source and foreign models that are replicating the capabilities very rapidly, that it very well could play out that way. But again, that's why we're not going to have all of our returns hedged to a single company. It's just generally not how we've played it. Then, I mean, power law principles are inherent to VC economics, so we'll see how it works.
All right, so Winnie, you're an alum of Columbia Business School, as is your Thomas.
Yeah.
Not this Thomas.
My Thomas.
And let's say that we've got, founders at Columbia Business School or, another great business school, and they're looking to, they don't want to deal with these $100 billion valuation companies right now. They're starting something and they're looking for first funding, and they want to come talk to you because they appreciate that your differentiated insight into consumer, for instance, where you do have a really different and interesting thesis, is something compelling. What kinds of things do they have to show you today that
Yeah.
would enable you to say, we're really interested?
I think in this world, even a pre-seed company, you need to have some form of product built, right? Some MVP that's, even I, a very non-technical person, can vibe code product. So I think that's almost a baseline. Show me that something you have built that works and you've tested it among, depending on the company, a group cohort of 10 to 100 people, and show me, a hypothesis for why you believe and you're convicted in this opportunity that, you probably have some sort of unique insight to. So I think today, why I think also I'm very more bullish on consumer is like the bar to creating, the bar to building something has drastically lowered because everyone is capable of starting something and building something, everyone in this room. So that's kind of probably what I would say. And with that, if the technical moat is not there for a consumer company or brand, how do you have distribution to kind of get customers would be my second question. So once you have something that works, what is your edge in kind of getting them,
So that's how do you form your cult around it?
around these
Exactly.
points maybe. I'm still brainstorming.
All right, I think that's where we should wrap it. This was really fun for me, and Thomas Mooney, thank you. And you did my favorite thing you could have done, which is you talked to each other and bounced ideas off each other, which was really fascinating for me to listen to, because you invest in some different spaces.
Well, we found out we're neighbors. We literally,
One
when
block
you-
away. And you
one
go
block
to you
away.
go to a crypto coffee shop.
I know, but I've-
I pay with stable coins, not meme coins.
Hilarious. Wow. Full circle.
Yeah.
And we're
don't
forming
pay with cash.
friendships and
That's so
neighborhood vibes. Good. So thank you. That was really, really fun. And Cabo is not in here, but thanks to him too. He is not in here because he's getting ready to perform for us in New York a little bit more, which we'll all get to enjoy, as well as some wines from Ed Cellar that are not yet
Authenticated.
authenticated.
on
But
the
we're
plane.
I
working on
only
it.
pour the ones that are not authenticated because I knew Thomas was going to be here.
And some networking, some time together. We're really excited that you're here with us in person. For those of you who are, for those who joined on Zoom or in California with us, thank you for being here with us, and we look forward to seeing you in person soon. To the Lowenstein team who put this together, thank you so much for doing that. It really took so many people to do this, especially as we're renovating the office and the space was changing. So thank you for all the hard work, and let's go listen to some great music.
Thank you.